So what's louder than fireworks on New Year's Eve and scarier than your Wi-Fi cutting out in the middle of a trade? The answer, non-farm payrolls. Traders, this is the monthly earthquake that we all sit and wait for. And this Friday, in other words, tomorrow, the ground is set to shake once again. The question is simple. Will the jobs report ignite a spark or unleash shockwaves in the market? Well, before you place your next trade, watch this. I'm Francois, your market analyst here at ATFX Africa, and welcome to this special edition of the Market Brief. Today, we'll be cutting through the noise to focus entirely on the one number that has the power to tilt currencies, shake gold, and send equities into a tailspin. The US NFP report. So, why does this NFP matter so much? Well, the US labor market has shifted from being the Fed's bright spot to its, biggest worry. Last month's disappointment of only 73,000 jobs added in July versus the expected 105,000, with the unemployment rate ticking up to 4.2%, while downward revision cut a hefty 258,000 jobs from the prior month. Well, that took the 3-month average down from to just 35,000, a level that screams slow down. This month's forecast, the consensus is currently sitting around 75,000 jobs added in August, with unemployment likely staying flat at 4.2%. Wage growth will be in focus too. Slower wage gains would reinforce the idea that inflation pressures are easing, but strong wage growth could complicate the Fed's decision. The Fed's policy connection, markets are currently pricing in an 88% chance of a 25% basis point cut in September. Powell has hinted that labor market weakness now carries more weight than sticky inflation. So this payroll number could either lock in that rate cut or force traders to start rethinking their positions. The benchmark revision. So this is a new report in essence that we also need to look at. Okay, so we also don't need to forget that the September 9th update from the BLS, which is the preliminary figures, suggest that the US payroll growth may be overstated. Okay, and I can't reinforce this enough. It might be overstated by as much as somewhere between 475 to 790,000 jobs during the beginning part of this year. That means that the labor market has been weak all along, adding even more pressure on the Fed, and this will all be brought into the spotlight potentially tomorrow. So NFP this month isn't just another data print. It's the heartbeat of the Fed's policy right now. So that being said, let's have a look at some potential key market reactions that we could expect during tomorrow's NFP release. So here's how this report could ripple through the markets, kicking things off with Euro USD. The Euro has held near that 1.163-65 zone despite rising European bond yields and fiscal concerns in Germany and France. The weak NFP could knock the dollar lower, which will send Euro USD towards that 1.174 resistance. But a strong surprise would likely fuel the dollar's rebound, dragging USD or Euro USD back towards that 1.15 handle. Having a look at gold, gold is already shining at around $3,545 an ounce, just off all-time highs. Now, if NFP disappoints and the Fed looks set to cut rates, gold could surge past the resistance, which is currently sitting at 3,560, and this will lead us into uncharted territory. Now, on the flip side, if payrolls surprise to the upside, well, then we could see profit taking that brings prices back towards either initially the 3,500 level or even as low as 3,440. And then lastly, let's have a look at Nasdaq 100. Now, equities are sitting on a knife edge. Nasdaq is sitting roughly at that 23,400 level. And the Nasdaq has settled below a heavy resistance, which is currently sitting at 23,750. Now, strong payrolls would reduce the likelihood of aggressive Fed easing, weighing on tech stocks already jittery from inflation fears. But if jobs data confirm a slowdown, we can expect equities to rally on fresh stimulus hopes, and well, support as well. We just have to touch this as well, is currently sitting around that 23,000 level, but this is only if things get messy. So let's map out the various scenarios that could play out during tomorrow's NFP release. If we have a strong beat, and this would probably be if payroll comes in north of 100,000 with unemployment steady, expect dollar rallies. Gold will face selling pressure and the Nasdaq will retreat as rate cut bets will fade. Translation, good jobs news might be the bad news for risk assets. Then we have scenario 2, which is a weak miss payroll, which would be a result closer to that 50,000 or below level with unemployment also creeping higher. That would cement the case for a September rate cut. Gold could push into record-breaking highs, equities might cheer for the stimulus hopes, and the dollar would struggle. And then finally, we have scenario 3, inline data. If we land near expectation, please don't assume calm, okay? Markets may churn until revision comes through, and revisions, as we saw last month, can be the real shockwave. So, will the dollar hold its ground, or will gold steal the spotlight? Will equities breathe a sigh of relief or brace for more turbulence? That's the suspense we as traders will be living within the next 24 hours. So tomorrow we'll find out whether the jobs report is a spark or a shockwave. Either way, markets won't stay quiet. So be sure to tune in for the full breakdown where I will be analyzing and trading this specific release live with every single one of you here on the ATFX Africa YouTube channel. So I can't wait to see you during that session. And with that, we wrap up today's market brief. Brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa by clicking on the link in the description below and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.